I look okay?
That's the first thing.
If this goes viral, I want to make sure that, I look okay. Just anybody have any questions before we get started? Okay, because we have a lot of material to go through, and if I don't get through it, I'll continue going. But go ahead and read the chapters, 1 through 3. I would actually just start working through the chapters up to chapter 9. Try to gain as much knowledge as possible. Go back and review your prereqs, particularly the macroeconomics and microeconomics, and your financial accounting. I would just go back, review that stuff, watch the videos. Just try to gain as much knowledge as possible so you can get up to speed as fast as possible. Okay. And then start working on the homeworks too. If you have any questions, just give me a call. I'll go over them with you if you have any problems. And I'll be here. I'm here at 7. So if you want to come by, check your answers, more than happy to do that for you. Okay. So let's get started. So the pre-test is due next Thursday. Okay. Just make sure that you show all the diagrams, with the histograms and the box plots and the stem leaf. Show the diagrams in the margin. Show all the calculations, the covariance, the correlation, the standard deviation, the confidence interval. Show the calculations, okay, so you can memorize those. And make sure that when you calculate the standard deviation, later on in the pretest, it's the portfolio standard deviation. So the portfolio standard deviation is not the standard deviation calculation from the standard variance calculation. It is the portfolio standard deviation calculation. And make sure you put in at the end either the covariance or the correlation. Okay, so I'm giving you some tips here. Also put in the calculations for median mode. So the more diagrams, the more calculations you put in, the more complete it's going to be, and the better off you'll be. Again, hopefully you went. I think I did send out the websites so that you know where to go to get the graphs to monitor the markets. Again, I didn't get a chance to really go through all of my Seeking Alpha articles this morning, but I did take a glance at Yahoo, and I was listening to NPR on the way over here, and it seems like the market is a lot of volatility in all the markets this morning. A lot of volatility. People are freaking out. Question will be, will they panic? And will it lead to another financial crisis that we saw in 0809? I don't know. We'll see how it plays out. But I would say hold on to your hat. This will probably be one of the most volatile semesters that I've taught this class since 0809. Okay, so hold on to your hats. Stock prices. You said they were down 2%. Okay, what's the down right now? You guys should be on your computers. What is it?
It just went down to 340 now.
So another 3. So it's down to 340. And what's it? When does it hit 15,000? That's what I want to know.
595.
So above it, about 50. So it's what, 15,500? 595. Okay. If it breaks through 15, see ya. It's going to probably correct another 10%, because that's the long-term support is 15,000. And I'll go over. I'm not going to do technical analysis tonight, but I'll show you how to do technical analysis, where you can look at historical pricing charts, set up the support lines, the resistance lines, go back in time and see where the historical supports are. And if it breaks through those historical supports, usually there's a sell-off. Okay, and I'll teach you about the technical stuff, because it goes right in with the fundamental stuff. And what about oil? Where are we at today? I heard that's like selling off too.
Oil's
2.7 in one day.
I'm showing 3.2.
In one day, in 24 hours. Yeah, that's huge. And where are we at per barrel?
26.
26. If it breaks through 20, see ya. Okay, that's another major issue. Gold prices, I heard they're up, so people are selling off the other asset classes going into gold. They're up 4 points. And what's it at now? Like when we were tracking it, it was around 1,100.
At 1,200.
12? Okay. So people are flocking into gold and flocking into gold futures. They're probably selling out of the stocks and oil, going into gold, and they're probably going into bonds also because of liquidity and safety, particularly U.S. Treasuries. The benchmark U.S. Treasury is the 10-year Treasury, the 10-year maturity. Where's the yield on the 10-year Treasury? I heard it was like 1.6 this morning.
Yeah.
1.6, and what was it yesterday? Or earlier in the week, like 1.7 or something? So it's dropped like 10 basis points. Where was it like 2 weeks ago, 2 months ago, maybe even 2 years ago? Give me some perspective of how low the 10-year Treasury has gotten, and when was the last time it was that low? And if it was the last time that it was that low was in a recession, we're probably in a recession. When was the last time it was trading at 1.6 yield to maturity, or interest rate on the 10-year Treasury was at 1.6? If you're getting back to times like 2013 and 12, 11, 10, 9, 8, those were the recession periods. So if we're starting to approach those, then
July
people are,
2012.
what is it?
July 2012.
That's like we were coming out of the recession. 8 and 9 were freaking brutal. 11 and 12 was horrible. So you're saying that the 10-year Treasury is now at 2012 levels? Okay, we were coming out of,
Yeah.
we were slowly coming out of the recession at that time, and we didn't really start to grow and recover until 2013.
You know, it was 2.24 in 08 actually.
2
It's
point
over.
in 08.
Yeah.
Oh, well, that was because we were coming off of the
Right.
peak in 07, in 06. So 08, you really didn't see the collapse in the market. It really started in November of 07 was really the early indicators, but we really, it didn't really hit until, when did you say? When was the peak in the yield?
2008.
Yeah, what month?
Oh, September 30th.
September? Okay, so there was like a lagged effect. Probably employment was still pretty good at that time. The whole, shit house didn't go up in flames yet, and it wasn't until later that year that things really got bad, Okay, so bond, and a lot of the bond yield compression is due to capital flight into safe and liquid U.S. Treasuries. Plus, people are also forecasting a recession, which means that inflation and inflation expectations have been going down. Okay, remember the Fisher equation? Nominal interest rates are determined by the real rate plus inflation expectations. If inflation expectations are going down because of a recession, then the yields are going down. So if the 10-year Treasury yield is going down, then what are bond prices doing? They're going up. Everybody get that? Okay, everybody needs to repeat after me. When interest rates and bond yields go down, prices go up. So when interest rates go down, bond prices go up. When interest rates go down, bond prices go up, okay? When interest rates go up, bond prices go down. Exactly, you gotta burn that in your brain, okay? It's the natural law of financial economics, and it's never violated. So when interest rates go down, bond prices go up. When interest rates go up, bond prices go down. When bond prices go up, interest rates go down. When bond prices go down, interest rates go up. Okay, so you gotta know all four of those, okay? And burn those in your brain. What's happening to the dollar? Last time I looked, the dollar was starting to depreciate against most other currencies after a major run in appreciation. Who knows? There could be massive capital flight coming out of Europe and the Middle East and Asia right now because they're freaking out, which means that the US dollar will theoretically could have appreciated against most foreign currencies over the last 48 hours. So tell me, has the dollar appreciated or depreciated against foreign currencies? And you can look against the pound or the euro, are probably the two best. I would not probably use the yuan. I would definitely use the yen. So if you can give me an idea if the dollar is appreciated or depreciated over the last 48 hours due to basically a mini market crisis that we're now witnessing.
It is depreciated.
It's depreciated? Okay. Okay, maybe people are selling off their dollars, their dollar-denominated assets to basically meet margin calls globally. Because if asset prices are dropping across the globe and people have levered up those positions, they're getting margin calls. They're gonna have to put up capital. And if they're in US assets that have appreciated quite nicely over the last couple of years, they're selling off their US assets, converting dollars into other currencies, flooding the dollar market, making the dollar depreciate, and going and paying off their liabilities because they're getting margin calls. Okay, so there's all kinds of stuff going on. And I'd like you to try to monitor it. I know you guys came in early this morning, you were wrapped up, ready to go. and you were talking about it. There's a lot of stuff going on. Okay, so that was just kind of an intro. I want to go around really, really quickly. You got to give me so I can get to know you and know what you want. Give me your full name. I know you're university, but you're going to practice your elevator pitch. College, university, give me your major, give me your concentration. Professor Souza, I haven't declared yet, just make something up. What company you want to work for, Professor Souza, I don't know who I want to work for, just make something up. And then what job you want. Well, Professor Souza, I don't know what job I want, just make something up. Okay, so you can practice the elevator pitch, and then once you do know your concentration, you slip it in there. Once you do know the company, you slip it in there. Once you do know the position, you slip it in there. This is basically just a template to use. Okay, go.
Okay, I'm Michael McCarthy.
And try to do it as fast as you can because it's an elevator pitch.
You say I go?
Oh, here, let me practice. My name is Professor Lawrence Souza. I teach at St. Mary's College. I'm a major in finance. I'm a major in business administration with a concentration in finance. I want to work for BlackRock as a portfolio manager. How long did that take? Literally like less than 20 seconds. So that's what I'm looking for. Your name, the college, the major, the concentration, the company, and the job. And let's see how fast we can go around. And don't be going, I think, I want, I'm interested in. Just be as totally succinct and passionate and direct and to the point, and as quickly as you can. Go.
Michael McCarthy. I go to St. Mary's College. I'm a business major. I'm not sure.
No, you got to put something in.
Make something up?
Yep.
Okay. No concentration.
No, you got to make something up. Just put marketing or something.
General.
No, just make some kind of, are you interested in economics or technology or something? Just anything. You got to have something, because if you're broad, nobody's going to help you.
Concentration in entrepreneurship.
I want to work for. I'll help you. I want to work for Google in their program development and marketing research department, something like that. You want to try again?
From the top.
Yeah, because I can't help you if you don't have any of these things.
Okay.
I just can't help you.
If I'm an entrepreneurship concentration, can my company be my own company?
Yeah.
Okay. I'm Michael McCarthy. I go to St. Mary's College. I'm a business major with a concentration in entrepreneurship. I want to start my own company and be the CEO.
Perfect. I forgot the grad date. I need the grad date. Okay, go. And if you could look at them, that's even better, because they'll be listening to you, and this is your new network.
My name is Alec Barton. My name is Alec Barton. I go to St. Mary's College. I'm a business major with marketing concentration. I graduated in 2017, and I want to work for Tech Systems as a recruiter.
Excellent.
My name is Ryan Perry. I go to St. Mary's College. Business, concentration, and financing. I would like to start my own.
No, don't forget the grad date, because I need to know the grad date.
2017.
I'm going to get you internships or jobs.
I graduated in 2017. I would like to start my own company in real estate development.
Excellent. Nice job. I can help you.
My name is Mustafa Mahmood. I am a junior at